Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Tuesday, January 15th, 2008. Today was a wild day, and I want to get into things today because it was unbelievable. And not so much the volatility, there was just constant pressure on this market. We closed at the lows, we retested the January 9th lows, and I'm going to show you guys the chart here right away. Alright, so let's get right into this. Here we are. Here's January 9th where we retraced, we moved lower, and then we bounced and closed higher for the day, creating that nice bottoming tail for the small bounce here. And now we've retested that low. And you can see with my crosshairs tool, here's the low with my point and my crosshair right on it, and it travels all the way over to this low right here. It's within about 15 cents, I believe, of that low on the SPY. And this is the SPY daily chart. Now, what's even more nutty, guys, is not only did we have a big sell day today, but you had some major news coming out. And a few videos ago, we did talk a little bit about how without any Fed rate cut news in this market, it was very likely we were going to retest that low. And now, after hours, there was some ugly news. Intel reporting missing, ugly across the board. Intel just an ugly mess. And I'm going to show you the Intel level 2 to get you a full sense of how much this stock is getting punished. This is one of the old golden boys. This is one of the greatest, supposedly big chip players. And here it is. It closed at $22.69 today, down 39 cents. After hours, trading at underneath $19.50 here. And that is a big haircut for a mega cap stock like this, all right? Unbelievable. And we're going to see some major futures selling based on this, and we are seeing that. The S&P futures after hours are down another 11 points. So just like that, and let's go to the S&P future chart here intraday. It's very rare you get, and let me get my trend tools out so we can do some trend stuff here. It's very rare you get a gap down in the futures because there's only a 15-minute period of the futures where they don't trade. So for the most part, it's rare. Unless something happens during that 15-minute span, you don't get a major gap. And here we have, this is probably one of the bigger gaps you'll see on the S&P futures. Right here is where we closed. Right here is where we opened 15 minutes later. Alright, so you have this gap window right here now, formation. Now the question is, where do we go from here? We have some major news. Intel was the first big tech company, aside from IBM, who pre-released earnings. But Intel was scheduled to release today. They did. They disappointed. It was not good. Now the next section we got to look at is what's going on tomorrow, because this market is in dire need of a rate cut psychologically. Psychologically, it needs one tomorrow. It needed one yesterday. All right? And yes, Cramer's been screaming, and I'm not a huge fan of Cramer, but in many ways, psychologically, he is correct. This market will continue to get hammered until the Fed shows that they're ready to step up. And it's true. A lot of talk in the media about how the Fed is so transparent, and that's the problem. Bernanke came out last week and said they're going to do whatever the market needs. And here the market is telling everyone that they need a rate cut, and the Fed's not giving it to them. And that's the problem. And he shouldn't have said that because everyone expected the rate cut within a day or two of him saying that. And here we are. Now, you know me. I'm going to stick by what I said. I still think we get a rate cut before the January 31st meeting. I think it could come as early as tomorrow, and it'll probably come by latest Monday. If it doesn't come by Monday, then I'm going to have to back off of what I say here and say that they'll probably wait at that point. Well, make that Tuesday. If it doesn't come by Tuesday, because Monday, I believe, is a holiday. So if it doesn't come tomorrow, Wednesday, Thursday, Friday, or Tuesday, then chances are they're waiting till the 31st at that point. The market's not happy. The market wants a cut, and I have a feeling the Fed's going to give in. The Fed has always shown that it gives in, and when Bernanke says something like he did the other day when he had that big meeting and said he'll give the market whatever it needs and not worry about inflation as much, that's exactly what he's talking about. All right? So, as we see the futures getting punished after hours here now, down 11.75, who knows where tomorrow goes? And the reason being is the CPI number. All right, and let's go to the intraday here. We are on the intraday ES chart, and we'll talk a little bit about this. But first, I want to touch on the CPI number because it is the huge number tomorrow. All right, CPI, the Consumer Price Index, measures inflation at the consumer level. All right, so it takes a basket of goods, and they find out the prices month after month of that basket of goods. Does it increase? Does it decrease? Etc. Now you have the core and the regular CPI. Regular CPI includes gas, fuel, and energy. Food and energy, excuse me. All right, so they a lot of times exclude that because that's so volatile. It goes up and down, just like oil goes up and down. So does that. Now, core is the key here. If core does not show much inflation, if it comes in 0.2 or less, you probably see a market rally, because that means the Fed can be more aggressive in cutting. They don't have to worry quite as much about inflation. Now, this is a government number. You guys know how I feel about government numbers. You know I don't trust them a whole lot, so who knows? But my point is this. We are gapping down here, or we did gap down in the futures after hours. It would not shock me to see a reversal tomorrow on news such as a good CPI number where the Fed can come out and cut. Whether or not the Fed does that tomorrow, should that CPI number be decent, is up in the air. I don't know. All right. What I do know is that probably they will do it at some point by next Tuesday. If not, they'll wait till the 31st. It's coming. A 50 basis point rate cut is coming at this point. My question is, do they do 25 now and another 50 at the 31st meeting? All right. This is a lot of stuff going on in this market. This is a scared market, a panicked market. It hasn't gotten to the panic level where the VIX is spiking above 30 yet. We start to see a VIX above 30, and then you can start looking for a bounce. That's where everyone kind of throws in the towel and says, oh, well, forget it. I'm moving out of this market. That's when you always have a bottom. When everyone panics and dumps, that's the bottom. We're not quite there yet, but we are at a point where we could see a positive bounce on a Fed rate cut for a day or 2 or 3 days, and then a retrace back down. Okay, intraday, you can see it here, folks. This is the intraday chart. Constant selling here. Look at this nice little trend line. Hit the top here, hit the top here, hit the top, tried to get above, couldn't do it, closed right on the line, and right down. On the downside, you have this little area right here, which was a declining trend line right here, which I drew in when I drew the gap window here right now. You can still see the futures are coming down 11.75 now. They were just down 12 and change, so it's kind of fluctuating here. But needless to say, everyone is waiting with anticipation and holding their breath for the CPI number tomorrow. Now, across the board, stocks got killed. All right, solar stocks, especially Chinese stocks, got hammered today. Look at SOLF, down $3.57 on the daily. Look at this fall. Now, granted, this run was insane, and I'm glad we cautioned everyone when it was up in this area here to be very cautious, because these stocks just can't. Anytime you have a parabolic run like this, you're going to have a pullback. All right, and it's going to be a dramatic pullback. Now, the question is, we hit the 50 today. Is this the near-term bottom, or are we tracing down to possibly this level right here? All right, this would be my next area where I'd look for a bounce. If it doesn't do that, then you're looking at the 200. If you get to that 200, I probably would step up at that point. And again, I'm not a analyst by any stretch, and don't go by what I say. But if it ever gets down to this 200, I'd probably step up there and give it a small, a couple hundred share shot, see if it can bounce $1 or $2 at that point. That would be a major sell-off at that point. So anyways, my point being is these solar stocks have gotten punished. Look at First Solar, down $20 today. Not only that, but after hours it's trading under 200. I talked about this in the chat room, and I said this stock has to go under 200 before it sees a bounce, or the market sees a bounce. It had look at this run. Went from $100 back in October all the way to 220. 280. $283 high. From 100 to 283 in a couple months. Way too fast, way too high. Now it's paying the price. You see the steep drop. As of now, it's trading somewhere down here at 199. Down $5 more after hours. All right, futures continue to trade down 12 here as I'm talking, and we'll see. All right, across the board, big time stuff, guys. I mean, Goldman Sachs getting punished here again. Back below 200, dropped $8 today. Financials were under pressure. They led this market down. Citigroup this morning was the start of it. Citigroup, we talked yesterday saying that it would take a lot for them to disappoint the market. Well, they somehow figured out a way to do it. They disappointed the market. Citigroup here. This is the chart on Citigroup on the daily. Look at that fall. And look at how perfectly the bounce happened right into those earnings. Right up to that 20. It's no coincidence that it moves right to that 20 moving average, which is a resistance point, and then gets killed. All right, you always got to trade with those moving averages. I use the 20, the 50, the 200 on the daily, and the 10-minute intraday as my trading tools. It's so key, in my opinion, so key to be safe in this market. This market continues to be a cash is king type market. Those of us sitting on the sidelines are the happiest at this point. And trust me, the way it's looking after hours here, that's the same. Now, again, let me caution this about after hours. It's just after hours. We have a huge number, a CPI number tomorrow that could totally change everything. So, yes, maybe we even sell off on that CPI number more. could punish the markets even more tomorrow, but it also could go the opposite way, or a Fed rate cut. There's so much BS going on in this market, and I want to stress that, guys. The other thing I want to point out here is that as a trader, as a near-term, as short-term trader, this market is exceptionally scary to short, because any morning you're risking the Fed intervening or the government intervening, and it makes, as a trader, a very scary market to short. Yes, it's been working fine, and that's all dandy, but when's the day when we wake up to a 50 basis point cut? Maybe tomorrow, maybe next week, maybe the 31st, who knows? But it could happen at any day, and that is scary stuff. Alright, guys, a lot of craziness going on here. The NASDAQ, unbelievable chart here. You can see right here, we retested those lows from January 9th, as we said we probably would. Now, the question is, do we go to March lows? We still have to take out the August low, but then is it March lows after that, or do we bounce? We'll talk to you tomorrow. A lot's going to be happening tomorrow. Take care.